some used cars and some auto demand. To help us set this conversation up, I want to welcome in TD Ameritrade Network contributor Jenny Horn. Good morning to you, Jenny. Ultimately here we're going to be talking some CarMax, some Carvana, as these are two publicly traded companies in this space. But this is an area that's tied into much of the macro conversation as well. We know used car prices have soared in recent CPI reports. And so, Jenny, take it away here. CarMax, $115 stock. It is traded with some pretty extreme volatility as of late.
Yeah, and CarMax has actually been met with some interesting selling since it hit its all-time high of about $138 a share in the beginning of May, now down at over 13% for the month. But more important than that, this used car pricing has been met with such demand. It's sort of wild, actually, when you look at the longer-term chart of CarMax, really the boom that it's seen over the last year. I mean, pickup prices alone were up 76% year over year. And we're seeing this demand for used cars up about 21% from April of 2020. And 10% of that increase was just due to April 2021 alone. So it's just remarkable, really, that right now it is increasingly expensive to buy cars because there simply are not enough cars. I mean, we're seeing the semi-chip shortage continuing to hamper new car production. And several companies also were just not buying more cars in 2020 amid the global pandemic. Now, these traditional car dealers like AutoNation, CarMax, Cars.com, Cars Guru were up on average over 100% over the last year. So these higher priced used cars is obviously benefiting these companies. Now, analysts are a little bit mixed on this. We saw Morgan Stanley actually see a pretty great long-term demand for CarMax. He said that Carvana and CarMax were both rated at buy, and he actually boosted his price target to $165 a share, which is about 19% above CarMax's all-time highs. Now, Wedbush saw a little bit less favorable future for CarMax. They said they see a slowdown in growth compared to 2019, and they're going to be faced with tough comps and tighter inventories ahead, which will signal a slowdown in growth. So he said amid the upside potential in the near term, they still see decelerating trends from here on out. Now, an interesting metric that I saw that was used to often measure used cars is the Manheim Used Vehicle Value Index, which set another record in April, up about 8% from March and up over 50% year over year. So that is obviously positive for CarMax. Now, one huge headwind is, of course, inflation. Amid so many other different sectors in the economy right now, we saw March to April pick up in prices, excluding food and energy, about 0.9%, which would signal about over 11% inflation for the rest of the year. Now, obviously, higher inflation equals higher interest rates. So this is a problem for CarMax. But many analysts are saying that this environment will normalize. Car prices will eventually normalize as car suppliers are able to pick up their production again. So we'll just, it's sort of waiting out to see how things normalize, because right now it feels a little bit like a waiting game for so many of these companies. But I have to say that we've been doing Fast Market for now many years. So I have looked at Fast Market or CarMax on social media many, many times. And I have to say that bar none, today had the most noise on Twitter of any other time I looked. I was shocked at how many people are talking about CarMax, probably just due to this heightened interest with higher prices. So that brings me to our first tweet today, which says, the largest used car retailer, CarMax, is benefiting from the surging used car prices. Now, CarMax does remain the leader of the used car space. It claims it has a store within 60 miles of 80% of the U.S. population. So the tweeter is not wrong there. They are objectively still the leader. But there is that concern that, they may have run up too far too fast. But our next tweeter actually believes they are still, the industry leader and that they're still poised to benefit. So our next tweeter today says, the industry is highly fragmented. CarMax is the leader with 2% penetration, up from 0.3% in 1999. The top 10 and top 100 competitors have just 5 and 8% share. More than 90% of all dealership competitors have one location and are losing share to big companies like CarMax. So I did some research, and on average, most dealers have about 200 to 400 vehicles per location. CarMax nationwide has over 30,000. So their footprint is just something that can't be ignored. But Tom, really my takeaway from all of this is it is an expensive time for Jenny Horn to be looking at used cars, correct?
Yeah, Jenny, that Nissan Cube that you had your eye on, do not buy it anytime soon, because used car prices are through the roof. And I think that's a big concern because you talked about inventories, and I think in this space, that lower inventory is driving those prices higher. And I think what a lot of people forget about is all the stimulus that the administration's put into the system has allowed people to make those big purchases, right? And automobiles is at the forefront of what a lot of people want to buy. And when you have a little bit of extra cash in your pocket, maybe you're not commuting, you're not spending your money on that, you're not eating out as much because we were on lockdown. So savings rates at all-time highs, and one of the first big items that people want to purchase is cars, and lower inventories, and especially the chip shortage causing the automakers not to be able to produce the cars that they want. GM said they're going to put 5 of their production facilities back online over the next month, which is going to help. But I would say if you want to look for signs of inflation in the economy, it's in used cars because I know somebody that I'm close to just looked at putting their car on the market, 6 years old, 30,000 miles on it, typically maybe go for about 22,000. They were asking 31,000 for that used car. So the dealerships like CarMax and Carvana and some of the others in this space are looking for inventory, and they're willing to pay a higher price for it. But if you're buying a car right now, maybe wait.
Yeah, Tom, I mean, good thing you already got that Kia Soul. Otherwise, looking at a car at this time wouldn't necessarily be beneficial. But the one thing I will say, though, and we'll get on this a little bit more in a little bit, Tom, but if this is truly the inflation, you could see how supply chains maybe work this out, and maybe it could be kind of transient inflation. This is a short-term potential price hiccup in terms of huge demand, low supply. You can see this potentially working its way out, but we'll see what happens as the months go on. Jenny, great setup here for us as always. You have a great weekend, and thanks for joining us this week as well. All right, as we say goodbye to Jenny, I want to welcome in Megan Brantley, the VP of Research at LikeFolio.com, joining us here on this Friday morning as we head into the Memorial Day weekend. And Megan, this is a general trend that had really popped out to you. You brought this to our attention in terms of the demand for used cars, and then, of course, what this means for some of these publicly traded companies, such as a CarMax or the car vending machine Carvana. So take it away here. Set us up with what you're tracking and what it means for these companies.
Yeah, so we like to, especially on Fridays, bring to you guys things that are popping in our data. And one thing that's undeniable is this chatter around used cars. And this is something that when you look at the mentions of people who are either purchasing a used vehicle or trying to purchase a used vehicle, looking for a used vehicle, they're pacing up more than 20% year over year. And you can see this continuing to build. So this is kind of getting ahead from a seasonality perspective, just leading and continuing to build. And so we thought, okay, let's look and see how are the different companies that are positioned in this used vehicle market performing. And I think it's interesting because previously, whenever we talked to you guys, it was a lot of times about, Carvana and the Vrooms, these digital companies that were really starting to take market share from the more traditional, brick and mortar like a CarMax. And what we've seen now is that CarMax is actually starting to outperform. So whenever you look at this chart, you can see the x-axis, that's that purchase intent, that demand growth. And then the y-axis is consumer happiness. And so you can see that CarMax is really starting to make improvements, especially on this quarter-over-quarter basis. This is something that we've got a close eye on from a consumer happiness perspective. That has improved about 6 points in the past year. And so that's something that's, it's impressive to see that improvement, especially as, localities reopen and people are now able to go and test drive vehicles, and they like that element, or some people do like that element, and it's starting to present as more of an edge for CarMax, whereas last year this was something that was kind of holding the company back. And so this is just one of those times whenever we start to see things shift, and we're starting to see this near-term strength and this near-term demand for a company like CarMax, and we're definitely seeing this underlying tailwinds from used vehicle demand, where, as Jenny was talking about, just new vehicle availability dropping with chip shortage and production shortfalls. So definitely an interesting scenario brewing, and we think that things are setting up potentially in a positive way for CarMax.
And Megan, if you look at some of your data, especially the positive comments that you see on that y-axis for CarMax and some of the others, and not so much on Vroom, But do you typically see that when you see a spike in maybe demand for these auto vehicles, do you automatically see that consumer sentiment happiness portion of your data start to rise also? Because everybody's happy when they get a new car, right? And is that tied into it almost too much at this point? Or is it something that is just always at elevated levels because everybody's pretty happy when they get a new car or a new used car?
You know, it's interesting. This is kind of, I would say, almost an inverse of what you would expect. A lot of times when we see demand rise, especially in scenarios like this, people like to talk about negative experiences. So a lot of times when you have more consumers interacting with a brand, sometimes sentiment can actually fall a couple points. And we would actually expect to see this because the demand is higher. The company's having to interact with more consumers, and there's a higher probability of somewhat of a negative experience. But we actually are seeing improvement alongside this surging demand for CarMax. And so I think that that's kind of what places this as more of an outlier and why it caught our attention, because you like to see those two things in tandem. That's typically a pretty strong sign. I think another interesting thing when we actually looked at the mentions of people who were engaging with CarMax is a lot of these were those seller mentions, as you mentioned, that people were talking about, yeah, you know, I sold my vehicle to CarMax. And so I think that one thing that a lot of investors or a lot of notes that I read were concerned about was potential inventory. And so whenever you look at these selling mentions and those starting to rise, I think that's a good sign that CarMax is really starting to build up its inventory to potentially meet this demand. I think that CarMax's quarter ends in a couple of days. I think the end of it is May 31st. And currently we have that demand pacing significantly higher year over year. So this may be, you know, a surprise brewing that we have plenty of time until its next earnings report that the street may not be anticipating.
Megan, building on kind of what Tom's getting at, I think it is interesting to see something like CarMax have such a high sentiment rating, because this is kind of your traditional way of going to buy a car. You go to the used car lot, you pick one out, you drive it, and now you're maybe even paying a more expensive price than you traditionally would, and it's still a very high rating on the sentiment gauge. I do notice that the size of the bubble there is much smaller than Carvana. And is this because, not necessarily that CarMax is doing far less volume, but because if you're going to go buy a car out of a vending machine, you got to tell everyone you did it, and they're maybe getting a lot more interaction on social media?
Yeah, that's a really good point. There is a novelty to Carvana, and you know that's partially why they sprung onto our radar a couple of years ago. They've just really had this explosive growth in the past year, and now we're starting to see that slow down a little bit. Obviously, still higher year over year. They're still growing, just not at the rate that they were. And what we're seeing is that CarMax's hybrid model. So now, you know, whenever CarMax saw this competition from this digital presence building from Carvana and the Vrooms of the world, they said, okay, well, we need to build this out. So now they have options that consumers can conduct sales completely digitally if they want to, but they can also go and test drive a vehicle if they want. So I think that in this instance, that omni-channel approach, if you can imagine, this is kind of like if they were a Target of the retail sector versus, say, an Amazon. Mm-hmm. So I think that this is something definitely to watch moving forward, especially if we continue to see demand building like it is, and CarMax continue to make improvements in consumer happiness and continually, you know, showing that they can actually execute and deliver a positive experience for the consumer.
Megan, we got to leave it there. Great stuff. Have a great Memorial weekend. We'll look forward to talking to you again soon, the VP of Research at LikeFolio.com. And so